How much higher do you think interest rates need to go in order to put a lid on inflation?
This is probably the $1 billion question, which no one knows, because as the Fed has pointed out, they will react in due time whenever they see the situation evolving. I think if I take it from the last Powell's speech, they want to have the CPI above the inflation rate for the whole curve. So that plays for at least a 4% rise, but one can imagine that we go even higher than that. I think from the Fed's point of view, the key issue is how do you get services back into the bottle, as was mentioned by the OECD secretary. And to achieve that, you need to have a much softer labor market. But having given money to everyone for the last 2 years, basically through the pandemic support, people continue to have a pretty nice financial situation, which is allowing them to spend on their daily life. So this is the whole difficulty. As long as the labor market remains as tight as it is, the Fed will basically continue to hike rates, and they will certainly wait for 2 or 3 months of the evidence that the market slows down before they start to change.
I think one of the most fascinating things about what we've seen in the past 24 hours is this stunning turnaround on Wall Street, an absolute heel-to-toe pivot for stocks, first slumping and then recovering into the later part of the trading day. What do you think traders are reacting to exactly? Is this bad news meaning good news or something else at play?
Now, I think is indicative of a market which is extremely volatile. It doesn't give us any clue about where the economy is going. It just tells us how extreme positioning of investors have been recently. The rebound we're starting to see is actually following many, many days of a negative market sentiment. And that is coming at a time where in September, the whole month of September was a down market. So the positioning of many people in this market is extremely light. People have gone out of equities recently. A lot of positions have been squared. So it only needs a small blip. It only needs a small catalyst for people to have to run to cover eventually some short positions. And this is how you can explain such a turnaround that we saw yesterday. So once again, nothing really fundamental. But the market and the way it is trading is indicative of the market, which is extremely volatile, when people's sentiment and positioning tend to be extreme, but especially very short-sighted.